Good morning. Welcome to Life in the Markets. My name is Tim Russell, and today is May 19th, 2025, and we have had a rather interesting week in the markets. One of the things that I wish I would have mentioned last week was that the markets were set to open up really strong on Monday. That was largely because there was announced a significant breakthrough in trade negotiations with China over the weekend. And everyone got excited within the markets. It looks like much of the worst or the more draconian tariff numbers were going to be much reduced. There was positive deliberations, positive conversations, and this is on top of what was happening with a trade deal in the works with Great Britain. And throughout the rest of the week, we saw numerous other nations coming to America, coming to our leaders and negotiating or starting to negotiate some amount of trade deals. These are all positive things. Therefore, the market had a very positive week last week. The S&P 500, for example, was up around 5.25% last week, which is phenomenal. We had a number of other indexes like the Russell 2000, which actually struggled last week. It was down about 0.5%. Now, why is it that we have such a disparity between the S&P 500 up 5.25 and the Russell 2000 down 0.5%? Largely, it's because of the size of the companies making up each of these indexes. In the S&P 500, most of the companies are huge companies that you would recognize. You probably own their products. You use their services in some form or fashion. In the Russell 2000, it's much smaller. It focuses on more niche and lower sized companies. Therefore, you're probably not going to recognize all of their names. So, okay, you're telling me, Tim, that the big companies did okay, the smaller companies not so much. Could you explain that? My best explanation, and I think it's largely correct. Obviously, there may be some more nuance to it that I'm aware of right now. But I think largely what's happening is that we have the larger companies with deeper pockets, better able to absorb tariff pressures and tensions. They're able to move their manufacturing in one area or to one country or another. When we're dealing with smaller companies, they have shallower pockets. They have less resources. They're not able to make some of the adjustments. So the good news that we got may not necessarily be good news for them because they'd already been working on doing one set of fixes, which was going to have a certain amount of cost to it, and now maybe they're not going to need to do that. So it creates, I think, more uncertainty for smaller size companies than it does for some of the larger size companies. So I think that's the explanation. I don't think smaller companies are any less sound than our larger companies, but they are certainly they're being affected differently this week. There are a couple other things that happened this week. Inflation data came back not as bad as many people are expecting. With all of the news of tariffs, everyone's anticipating the cost of living, the cost of goods and the services that you and I use are going to be more expensive. The data came out this past week and it said, yeah, maybe not so much. The consumer price index was up 2.3%. Not bad at all. There's another index, it's called the Producer Price Index, and that actually showed marginally lower inflation than what we had been expecting. So on each of these levels, costs do not seem, at least at this particular point in time, to be seeing a significant increase because of tariffs. I think that's good news. The market's taking that in as good news. Employment still seems very sound. I think one of the first things that we're going to be looking for signs of economic trouble with tariffs is going to show up in our unemployment reports. Again, right now they look okay. So I feel like there's a lot of really good news that the market is facing right now, which brings us to today. What are we looking forward to this week? Well, this week we've got a lot of interesting things going on, but the big news over the weekend, the big thing driving the markets today on the 19th is we've got the Moody's downgrading U.S. government debt. They're saying now instead of the perfect score, instead of getting 100% of the test, now we have a 98. We're downgraded. Now, obviously, we all want 100. We all want the best score possible, but let's face it, we have a very disjointed, dysfunctional government, and Congress, Senate, they're not doing an awful lot in terms of actually getting legislation passed. We don't have a tax deal yet. There's a lot of fighting going on. So because of this and many other things, the Moody's, Standard & Poor's, and some of the others are downgrading U.S. debt. I think the news report I read last night was that Moody's was the last of the three major credit rating agencies to downgrade debt. So to me, that sounds like old news. It's nothing new. We haven't discovered anything. It's not like we're any less viable today than we were on Friday. But you'll see the market trading pretty aggressively down this morning. I don't expect that to last. I think that by the time we get here and have our next video, it's probably going to be forgotten. It's probably going to be a non-issue. I could be wrong. I don't know the future. That is my suspicion because, frankly, nothing has actually fundamentally changed. We still have a good credit rating. We still are one of the strongest economies in the world, one of the safest places to keep money. None of that's going away. Okay. I feel like we've gone on long enough. Let me just give you a couple things that we're looking forward to. Obviously, we have the Memorial Day weekend coming up this weekend, which means Monday, the next week, is Memorial Day, and I'm not going to be here. Tyler, my producer, is not going to be here. Therefore, you don't look for an episode next Monday. We'll be taking a week off as we celebrate the holiday, but we will get back at it in June. If you have any other questions, topics you'd like for us to discuss, please feel free to leave that in a comment on the video or email it to us here at the Life Group. We'd be happy to listen to those. Well, I got a verse for us today to consider as we wrap up our time. And the verse comes to us from Philippians chapter 4, verses 11 through 13. I'm really going to focus on just a couple snippets of this passage. It says this: I have learned in whatever situation I am to be content. I can do all things through Christ who strengthens me. I don't know what you're facing today. I don't know what good news or bad news you had over the weekend. I don't know what is happening in your life that's making you frustrated or discontented. But I can say that God's grace and His strength is here to carry you through both the good days and the bad days. I have learned that in whatever situation I am, therewith to be content. That passage goes on to talk about, I know how to abound and how to be abased. I know how to do well and how to rejoice and how to suffer. And frankly, I can do all of this. I can face whatever life throws at me because God strengthens me to do it. So today, whatever you're facing, look to Him and be content with what God has given you, because His grace and His promise is that He will never leave you or forsake you. That if God did not spare His own Son for you, how much more is He willing to help and support and supply for us? With that, may you be encouraged. Take care. See you next time. Bye-bye.
The topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investing and investment strategies involve risk, including the potential loss of principal. Past performance is not a guarantee of future results. Securities and advisory services are offered through Genius Wealth Management, member FINRA and SIPC.